Good day, and welcome to Q4FY23 earnings conference call of Ujjivan Small Finance Bank Limited, hosted by IIFL Securities. We have with us today Ittira Davis, MD and Chief Executive Officer, Carol Furtado, Chief Business Officer, Martin P.S., Chief Operating Officer, Vibhas Chandra, Head of Microbanking, Deepak Khetan, Head, Financial Planning, Strategy and Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ittira Davis, MD and Chief Executive Officer from Ujjivan Small Finance Bank. Thank you, and over to you. You may go ahead, please. Are we unable to hear you? Ladies and gentlemen, please stay connected while we check the management line. Ladies and gentlemen, we have the management team connected. Please go ahead, sir.
Okay, thank you. Good evening, everyone, and welcome to our fourth quarter FY23 earnings call. Hope all of you are keeping well. Fourth quarter not only was a successful quarter by itself, but also marks Ujjivan's crossing several milestones along its journey of becoming a leading mass market bank and setting new benchmarks. Some of the milestones we crossed are quarterly disbursements of 6,001 crore, up 23% year-on-year and 24% quarter-on-quarter. So this is a crossing of the 6,000 mark. A yearly disbursement of 20,037 crore, up 42% year-on-year. This is the first time we have crossed the 20,000 mark for the year. Total deposits at 25,538, up 40% year-on-year and 10% quarter-on-quarter. And again, another landmark or another milestone crossing the 25,000 mark. New benchmarks on profitability side, our quarterly profits crossed the 300 mark at 310 for the fourth quarter and 1,100 crore mark for the full year at 1,100. This makes us the second most profitable small finance bank as well as the second most profitable player in the MFI business. We launched our visual, voice, vernacular-based mobile banking app, which aims to increase digital penetration among semi-tech savvy customers. I'll take some time here. The app is the result of a futuristic thought process and makes it very convenient for this category of customers to access mobile banking and transact without much assistance. Currently, the transactions include like EMI payment, balance check, money transfer, etc. However, we are working towards transactions like loan application as well on this app. It is the first application of its kind and will go a long way. We have already received a lot of accolades here, including the Aegis Graham Bell Award for 2022 for innovation in customer tech Total downloads of this app have crossed 130,000 within a few months of launch, and we are already seeing customers using the app to repay. Another first thing that we have this year is the payment of equity dividends. Given the strong performance, the board has suggested to share a portion with our shareholders. We have already paid 75 paise as interim dividend, and the board has recommended an additional final dividend of 50 paise. I would mention here that this is one of a kind high payment because of the special case as well as the bank crossing so many milestones in fiscal 23. During the quarter, we picked up branch expansion with 31 new branches, taking the total to 629 for the financial year ending March 23. Total number of branches during FY23 was 54. We marked our presence with 5 branches into the state of Telangana this year. These branches have already garnered good number of deposits in excess of 175 crores. And now we expect to open 100 branches in financial year 24. And that includes entering the state of Andhra, which will be our 26th state. An update on the merger with our promoter UFSL, Ujjivan Financial Services Limited. We have submitted our application to the Bengaluru NCLT after receiving all requisite approvals and now await the NCLT guidance on dates to hold meetings to get the various regulatory clearances like shareholder approval. As you are aware, my tenure as MD and CEO has been approved until January 25. The board has been working on identifying my successor. Among other aspects, the candidate should be having a strong business orientation, connect with ground and dedication towards building a mass market bank. The board would identify the potential candidates, internal or external, much before the due date to ensure a smooth transition. On the disbursement side, not only did the bank cross milestones this quarter, but also individual businesses made their own milestones. The housing disbursements were 439 crores, up 44% year-on-year and 27% for the quarter, crossing the 400 quarterly disbursement. Similarly, FIG disbursed 318 crores, up 165% year-on-year and 33% quarter-on-quarter, crossing the 300 crore quarterly disbursement. Our micro loan disbursements, group and individual, were also at the highest ever with 4,929 crores, up 25% year-on-year and 30% quarter-on-quarter. Our group loan gross customer acquisition during FY23 stands at 9.1 lakh, constituting more than half of the growth during the year. Our gross loan book grew 10% quarter-on-quarter to 24,085 crores after a total write-off of 67 crores, of which 55 crores is technical write-off. We are quite pleased to share our performance on the deposit side as well. Total deposits grew 10% quarter-on-quarter. CASA grew 11% versus December. This is despite the industry trend of flattening CASA trend. Our collections and asset quality continue to improve, putting us among the industry best on this regard. Our NDA collections are back to pre-COVID days, with overall collection efficiency continuing to track the 100% mark. Our GNPA is down to 2.6% from 7.1% at the beginning of the year, while NNPA are at remarkably low levels, currently in the range of 0.04% to 0.05% for the last 3 consecutive quarters. Restructured book continues to show healthy collections. The book now constitutes less than 1% of our total gross loan book with a very high provision cover. We had slippages of fresh GNPA of around 19 crores this quarter, while upgrades and recoveries were 59 crores for the fiscal. Slippages were 335 crores with upgrades and recoveries of 506 crores. The collection and asset quality improvement during FY23 highlights the success of dynamic collection strategy, which encompasses balanced usage of on-roll and off-roll collection team, along with multiple agencies and data analytics. While slippages have started to normalize towards the end of FY23, we believe bad debt recoveries would continue during FY24. On the financials, our NIMs for the year stands at 9.5%, in line with our previous guidance. This is a blend of rising cost of funds, which has been partially set off by yield expansion. The cost of fund rise is being driven by rising repo rates and aggressive pricing in the wholesale deposits. While we believe rate curve may start to plateau, the rise in cost of funds may take time to flatten as our old funding slowly gets replaced at current rates. The yield expansion is due to reducing NPA driving higher income generating loan book and some rate hikes taken in the asset businesses. Last change in microbanking rates was on 1st of March 23 when we had a 50 basis point hike. The pre-provision operating profit for fiscal year was 1,485 crore. With a negligible credit provisioning, PAT stands at 1,100 crores. For the quarter, pre-provision operating profit and PAT stands at 411 crores and 310 crores respectively. Now, I'd like to just give you a brief outlook for the financial year 24. Fiscal 23 has laid a strong foundation for the next financial year 24, and we are committed to build on this base further. While we would like to continue to invest in technology and digital platform to increase productivity and also improve customer experience, enhance business growth, we also plan to increase our investments towards branding and marketing in order to enhance brand visibility and consolidate on the good work that has been done during the past 6 quarters post-COVID. Our gross loan book growth to be 25% or more during FY24. Our focus remains on driving sustainable growth through customer acquisition in microbanking and growth in our secured book. While housing has been growing strong, our MSME and vehicle portfolio will see a pickup during the current fiscal year. The MSME book has not seen a growth in FY23 as there has been some strategy transition towards a more balanced portfolio mix. Here I'd like to also say that in line with the Reserve Bank of India guidelines with fintechs, we have had to move out of one of the relationships, and that has reduced our exposure in the MSME business. But we are working on 2 or 3 new partnerships which should get going in the second half of this year. Deposit growth for this year is going to be 30% or more, with further focus on CASA and granular book growth. Also, we are focusing on digital deposits, which will see a commercial launch early during the current fiscal year. We have been focusing on making alternate service channels like phone banking, video banking, IBNB more relevant and productive. These investments would start bearing fruit in the current financial year. We expect to keep credit costs sub 100 basis points and an ROE around 22% for financial year 24. Other details are now available with our investor release. Fiscal 2023 was an extraordinary year in terms of business performance and profitability, and has laid down a strong foundation for our coming years. We are on track to create a leading mass market bank serving fast-growing, aspiring middle class of the Indian society. I'd like to stop here and request the operator to begin the Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Lavanya Sisodia from ICICI Securities.
The line आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी
Get the call on hold. We'll move on to the next question from the line of Manoj Oberoi from Yes Securities. Please go ahead.
Yeah, sir, hi. This is Rajiv here. Sir, firstly, good evening and congratulations on very strong set of numbers. So, sir, I've got a few questions. Sir, firstly, what is the implied view on NIM? When you give a 22% ROE guidance for FY24, what is the implied view on NIM? Because in the last quarter, we saw the NIM decline despite the fact that spreads had actually improved on the portfolio. And that was because of increasing balance sheet liquidity and coming off of LDR. So how do you see these two things play out? And how then eventually how do you see the NIM behave in the coming quarters?
Manoj, we expect that the NIMs in the coming year will be 9% or plus. In the current quarter, given it was the last quarter of the year, the liquidity inflow on our deposit side was quite high, which increased the proportion of our treasury book also, where generally the yields are on a lower side, which is why there was an impact on the yield. That is something that can be corrected in the first quarter itself, and we should see for the full year next year, NIM should be 9% or more.
Got that. And see, on the collection efficiency, while you've given the collection efficiency in the restructured portfolio in the month of March was 111%, can you also give us the collection efficiency on the NPL portfolio for Q4? How much was it?
On the NPA portfolio?
Yes.
NPA has been tracking around 40 or more for us.
Okay. So, I mean, just broadly, if you're collecting 40-50% of the NPLs on a regular basis, the restructured asset collection efficiency is also pretty high. Then what is the thought about, provisions going ahead? Because we're carrying about 98% provisions on NPLs. So when you give this sub 1% credit cost guidance, are we taking in some benefit of rollbacks and write-backs of the current provisions that we are holding?
Some bit of rollback might happen because, like you mentioned, that the restructured book where we have a very high provision, the collection efficiency is very high. Even on the NPA book, there is a collection efficiency which is 40% plus. So some bit of a rollback might happen. So all blended in, we are giving a guidance of sub 100 basis point.
Got that. Thank you, Deepak. Thank you so much.
Thank you, Manoj.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We have a next question from the line of Renish from ICICI. Please go ahead.
Yeah, hi. Congrats on a good set of numbers. So just two questions. Yeah, thanks, Deepak. So just two questions from my side. One, again, on the NIM side, so this quarter we have seen asset yield expanding by 50 basis point, with this cost of fund increasing by only 30 basis point, and despite that, NIM contracted. So if you can just help us through the reconciliation. I mean, is there a bit of this IBPC securitization angle?
No. So like I mentioned in my earlier remark also, the treasury book size increased because there was a good amount of inflow on the liability side. So there was too much of deposits that came in, and our LCR were very high. So there was almost 500 basis point higher treasury book size that we had this quarter compared to last quarter. So that impacted the overall NIMs rather than anything else.
So margin expansion was basically driven by the investment yield rather than the asset yield is what you are trying to say.
You are talking about the yield expansion?
Yeah.
So yield expansion was driven by one, we took a rate hike in our MFI portfolio in September, so full quarter impact of that. Then another rate hike we took in March, another 50 basis point rate hike was taken. So put together these two things, plus the NPAs are continuously coming down. So that is why the yields are expanding, and the same thing will continue in the coming year as well.
So September 22, how much rate hike we have done in MFI?
50 basis points. Both the hikes were of 50 each.
15?
50.
Okay, and another 50 basis point in March.
Yes.
So what is the blend, the lending rate now in MFI?
23 and 25. 23 and 25. 23 for GL, 25 for IL.
Okay, 23 for...
And also one more thing is that the IL is going faster and
Correct.
IL has a higher rate. So that also is helping on the yield side.
Got it. And secondly, just a data keeping question, I missed that part. So if you can just give us the slippage recovery number for this quarter.
So this quarter slippage is 19 crore. Fresh
19.
Gross NPA addition was 19 crore and upgrades and recoveries were around 59 crore.
Okay. So slippages were only 19 crore.
Yes.
Okay. That's it from my side. Thank you, Deepak.
Thank you, Ramesh.
Thank you. We have our next question from the line of Gautam C. Jain from GCG Financial Advisors LLP. Please go ahead.
Good evening, sir.
Good evening.
Many congratulations for very good set of numbers.
Thank you.
My question pertains to your cost to income ratio. This year we are closing around 55%. So what we want to guide for the next 1 year or 2 years, how much our absolute cost will go up, considering we are opening 100 branches next year?
Gautam, we are not giving a guidance right now on cost to income ratio or any other aspect. Overall profit side, we have given a guidance that ROE will maintain 22% or more. For cost to income ratio specifically, we can say that there is going to be a lot of investment which is coming in on the branch side, on the IT side, on the human resource side. So it would not be something the kind of drop that you saw this year, that kind of a drop would not continue. Because this year you saw a significant drop from 64% in Q4 last year to 55% this quarter. So that kind of a drop would not be possible.
Okay. And any comment on the cost of fund? Has it stabilized or it's going down? Can you comment on it?
Cost of fund we do not expect to come down, while even if the interest rates in the system plateau out, the full year impact of the TDs and all the funds that were raised last year during the course of the year, that will impact the overall cost of funds. So cost of funds, at least for the time being, will keep moving up at least until maybe towards the second half of the year, when the fresh rate or fresh funding is coming at a lower rate, if the interest rates start coming down.
But on the interest rates, I want to just mention that our strategy on the deposit mobilization steps is that once the interest rate starts showing in decline, we'll be able to take advantage of that.
Okay, great. Thank you. That's it from my side.
Thank you.
Thank you. We have our next question from the line of Shripal Doshi from Equirus. Please go ahead.
Hi, sir. Thank you for giving me the opportunity and congrats on a good quarter. So, wanted to understand, what is the branch expansion strategy for the next couple of years, and in which geographies would we be targeting?
Yeah, I think we had 54 branches which we added during the financial year 23. We plan to add about 100 more branches during FY24. These will be spread across the country and different types of branches. Some of them will be purely branch banking, some of them will be composite, some of them will be micro banking branches. But rest assured that we are looking not just at branch banking to grow the business, we are also looking at digital business to be able to grow our way forward. So that is the dual strategy which we have. And in terms of new states, we are entering Andhra during this financial year. Last year, the new state we added, 25th state was Telangana, and our 26th state this time will be Andhra. So that's the way we are looking at this year. But going forward, the digital strategy will begin to play a greater role as we are looking to manage the costs and also look at other ways to expand our business. So a lot of technology on the ground, video calls, video banking, phone banking, all of those will play a bigger role as we go forward.
Got it, sir. So just a second question, just in line, on the same lines. So do we expect any material improvement in the OPEX upon asset metric going ahead in FY24 and in FY25?
We might see some improvement, but we'll not be able to quantify anything right now.
Okay. And the last question was, you had given guidance for deposit growth. So, sir, if you could please repeat it. I missed it. Thank you.
The deposit growth, we are looking at 30% for this year.
Got it, sir. Thank you so much, sir.
30% plus.
Perfect, sir. Thank you. Please for the next one.
Thank you.
Thank you. We have our next question from the line of Yash Dantewadia from Dante Equity Research. Please go ahead.
Hi. Good evening. Am I audible?
Yes.
Hi. Good evening.
Hi. So my first question is regarding your write-offs. During the last 3 financial years, your write-offs have been close to 1,145 crores, out of which we've recovered approximately 12% of the write-offs. Your peer company with a similar size loan book has written off close to 600 to 650 crores. So what I would love to understand is the reasoning behind this, and ideally what percentage of the write-backs would we look to recover back?
Yes, I can say that more than 1,000 crore of active technical write-off book is there with us right now, from which we can expect recoveries in this year or coming years.
So you basically are telling me that you'll recover close to 60-65% of the...
I'm not giving a percentage. All I'm saying is from whatever we have written off last year and during this year, around 1,000 plus crore is pending or is still in an active technical write-off book, and from that we are continuing the recovery effort, and whatever recovery will come this year will come from that.
Also, 2 con calls, or I think in the last con call you said that the recovery should slow down from here. But we still haven't seen that happening. The recoveries are still at the previous pace. So what do you think about that now?
Well, last quarter, yes, we did caution that the recoveries may slow down, and we are happy that it hasn't slowed down yet.
So you're expecting the momentum to continue?
We expect that the momentum will continue, but definitely next year's recoveries will be lower than this year.
Okay. My second question is regarding the floating provision. What's the latest update with that, since your net NPA is the lowest in the industry? When will you reverse it?
We are not looking to reverse it. It's there on the book as a cushion to the balance sheet, and in case of any emergency or extraordinary circumstances with prior approval to RBI, at only such circumstances will look to add it as a specific NPA provision. Although right now 120 is an NPA provision, 100 is an other provision, and 30 is being used as towards tier 2 capital.
Also, regarding gold loan, what's the latest update? Have you seen any traction in this space yet?
Gold loans is something that we hope to do much better this year. We've already started the process. We've got people on board, and we have identified the branches in which we will be doing our gold loans. It is mostly in the south region, and this year we should see better growth in the gold loan portfolio.
So how will it affect your NIMs, ma'am, the gold loan portfolio, growing the gold loan portfolio?
Gold loan that we are looking at is slightly lower than the overall bank level yield as of now. So definitely on the NIM side they are on a lower side, but given they are more shorter tenor and all renewals are quite frequent, and it is in line with whatever 9% guidance that it's already baked into the 9% guidance that we have given.
Okay, ideally, would you like to give any guidance for the gold loan portfolio? At what pace would you like to grow it?
No, we are not giving any specific guidance.
Okay, thank you for taking all my questions. Good luck.
Thank you.
Thank you. We have our next question from the line of Harsh Shah from Dimensional Securities. Please go ahead.
Hi, good evening, sir, and congratulations on great numbers. My first question is on the growth. So last year, FY23, we saw much quicker growth in the MFI, both group and individual MFI segment. And a couple of years back, we had guided that we will be looking to grow the non-MFI book at a much faster rate. So when we guide 25% kind of growth, what is the growth that you are expecting in MFI and non-MFI segment going ahead?
See, one of the things that you have to keep in mind is that coming out of a COVID situation, our micro-banking book was much better positioned since that is a business that we know very well to recover. So that is why between FY22 and FY23 we have seen an increase in the unsecured book in proportion to the rest of the book. But going forward, we have also brought our housing portfolio and our housing business in line in terms of being able to now grow at a much faster pace. So that will happen during the current year, and slowly our other businesses will also be put in similar position to grow at a faster pace because we are getting some of the technology and other things sorted out. So eventually we'll see a more balanced portfolio. But for the next financial year, we are looking at about 68% unsecured / micro banking, and the rest of it will be secured with a multiple number of products.
All right. And over next 3 to 5 years, where do you expect to settle this MFI book at?
No, we are moving slowly towards the 50% mark. Whether that comes in 3 or 5 years, we'll have to wait and see. But that is the trend, and that is the direction that we are moving towards.
Okay. And on the disbursement side, if I look at the segment-wise annual disbursement number which you have given in when I juxtapose it against the closing AUM, I believe that the rundown has increased a bit in the individual MFI and affordable housing MFI. So is it because the tenor has decreased or how has it impacted? What led to this higher rundown in both this book?
In affordable housing, actually, there was a subsidy repayment of around 160 crores that came in this year, which impacted the book.
Okay, and in case of individual MFI, I believe that it has come down from 19 to 13 months. It's a rough calculation for individual MFI, but what led to the sharp increase in rundown?
Actually, the repayment period or the month that we call repayment month, internally how we call, has increased in individual loan. It has not come down.
So you mean to say that the monthly EMI has gone up?
If you are looking at only for example, the OSP or the gross loan book, it could also be a factor of what was written off during the year and not just the disbursement movement and the OSP movement.
Okay. And on macro basis, in microfinance, has the EMI remained same or has it gone down or gone up? Just trying to understand whether the tenor has remained same or has increased.
And one more thing, the IL percentage has actually gone up YOY.
Sorry, I didn't catch that.
The individual loan percentage has gone up YOY, and that is the trend that we believe, and it will continue as the industry is slowly moving towards more of individual loans from group loans.
And post-COVID, how has the EMI repayment and tenor behaved for MFI book?
So the tenor is concerned in microfinance in both GL and IL, we witnessed that our average tenor has increased a bit, as we have also started offering IL more so to the graduating customers who are have shown good repayment history in the past. So as your loan amount increases, customers also tend to take loan with higher tenor, and that is what we have seen. Our average tenor has increased by, say, close to 10 to 15% in the last financial year.
Okay, that was really helpful. Thank you so much, and all the best.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a next question from the line of Darpin Shah from Haitong, India. Please go ahead.
Yeah, good evening. Congratulations for a good set of numbers. So I just have one question. We are saying that loan loss provisions will be sub 100 basis points for the next financial year. But if you look at the numbers in terms of PAR, SMA or GNPAs or even the additional provisions which we have on the restructured book. So why still at 100 basis point kind of a number? Are we thinking of creating additional standard asset provisions here?
No, Darpin, we are not looking at any change in provisioning policy as of now. That is the guidance that we can give right now, and we'll see how we perform during the year.
So this is just solely on the book basis where we might see some rise in or some deterioration in asset quality after a wonderful benign numbers in 23. Is it in the right thing?
No, we are not expecting any negative surprise in the asset quality. It's just a guidance or blended guidance that we are giving right now, and hopefully we'll keep performing well on the guidance.
Thank you, and all the best.
Thank you. We have our next question from the line of Rashmik Oza from 9 Rays Equity Research. Please go ahead.
Yeah, I had two questions, sir. The first is, do you have any targets of CASA set for end of FY24? Because right now we are at 26%. So is there any internal benchmark at what rate you want to reach in the next 1 year? And second is, you shared some inputs on the reverse merger. If you can give us some timelines, by when do you expect this entire process to get over, and when we can expect, the holding company to get merged into the SFB. Thanks.
Yeah, on the CASA, we are targeting to end FY24 at around 30%. On the reverse merger, right now, the reverse merger is with the NCLT. We are waiting for them to come back to us with whatever requirements they have. We are at the best, we are looking at September as the conclusion. It may extend a little further depending upon the, that constrain the time. But our best effort, our best number that we are looking at, or best date we are looking at is September.
Thanks. That's it from my side, sir.
Thank you.
Thank you. We have our next question from the line of CA Kamaljeet Singh from Balaji Finvestment. Please go ahead.
Good evening. Congratulations for the good set of numbers. And most of the questions are already answered on CASA, on merger. So, what will be the next step forward to becoming a full-fledged bank?
Yeah, you're talking about a universal bank?
Yes, sir.
Yeah, some of the conditions which are for the universal we have met, the 5 years, etc. So now what we are doing is we are waiting for the reverse merger to, and will take a decision on whether to apply for a universal bank or not. But that is eventually the direction we are going, and balancing of the portfolio between secured and secured is all in that direction.
As an investor, we are very happy with the services that you have provided to this organization. And you have stated that you will be moving on in January 25. Is there any chance that you may continue?
No, as you know, the RBI has a rule that CEOs cannot stay beyond the age of 70. You have seen that in other banks as well. So that will apply to Ujjivan. To that extent, the outer limit for me is January 25. But rest assured that we are in the process of finding a successor, and well before that date, we will have the successor in place. So we are very focused on that. But the other thing that you have to keep in mind is the depth of the management and the depth of the talent that we have in Ujjivan, which has been very much responsible for the swift turnaround that we have achieved. In 1 year, we have gone from a loss-making situation to the most profitable year. And that shows you the depth of the institution. And that is something all investors should keep in mind. And that makes a difference between one institution and another.
So looking at your capital adequacy, you don't find that you will be requiring capital anytime soon in next year?
Sorry, come again.
Looking at your capital adequacy ratio, is there be any requirement for any fundraise?
At this stage, we are well capitalized. We are at about 25%, and I don't see 25.8% to be precise. We don't expect a need in the next couple of years. Based on the profitability that we are and the target, we always look at a target of not going below 20%, which is why we replenish the capital when we reached that last year. But for the next 2 years, I don't see any need for additional capital.
A couple of things that you need to keep in mind there is one, with the reverse merger, capital adequacy would be having a little bump up given that the additional net worth that will be added to the book, and also that this year, as we are guiding for a high ROE, the consumption of capital would not be very high.
So that is a very positive thing. Thank you, sir, for my.
Thank you. We have our next question from the line of Priyesh Jain from HSBC. Please go ahead. Mr. Priyesh Jain, we have unmuted your line.
Hello.
Yes.
Yeah, can you hear me?
Yes,
Hi, Priyesh.
Yeah, hi. So I wanted to know what is the movement of GNPA for FY24? If you could give me the expected number of slippages, recoveries, and upgrades for the same.
We have not given GNPA guidance for the next year, but we believe the slippages have more or less normalized, and given the collection trend that we have seen, we do not envisage any major negative surprise there. And all that is baked into the 100 bips or sub 100 bips credit cost that we have given, the guidance that we have given.
Okay. So also I mentioned earlier, what are the slippage numbers for FY23?
So for the fiscal 23, the total gross NPA addition was 335 crores, and upgrades and recoveries were 506 crores.
Okay. Thank you.
Thank you.
Thank you. We have our next question from the line of Preet Nagarsheth from Wealth Finvisor. Please go ahead.
Good evening.
Good evening.
One of the questions I wanted to understand is that on the profitability side, you've given a guidance of 22% on the ROE. So should we expect on the overall profitable number to degrow from the current year? From the last financial year, that is?
No, we are not looking at profit degrowth.
So what kind of growth should we pencil in?
You can do your math. There will be a growth on the PAT number. The PPOP growth would be much higher, but even at the PAT number, we'll have a decent growth there.
To understand is that, do you have a sense of how much additional book value would increase because of the merger, the reverse merger?
Right now, I don't have a final number because we have board has today announced a final dividend of around 50 paisa, which will also go to the UFSL book. And depending upon how the timelines work out and all, we'll get to know how much a final cash would be there. As of now, if I exclude this 50 paise, I think roughly around 0.8 or plus minus 10 paisa there should be added to our book value.
Wonderful. Thank you so much for that.
Thank you.
Thank you. We have our next question from the line of Vivek Gautam from GS Investment. Please go ahead.
Yes, congratulations on consistently giving good numbers. The one question is about the risk of our political risk of investing with MFI. One fine day we see very shocking development, for example, in Assam, and which has led to the leaders they suffering, still suffering. So what are we doing to negate the political risk of MFI investing in India, this being an election year, any impact on us? Sir? That's the first one. And second one was, what is our plans of moving towards the secured lending, sir? Thank you.
So answering your first question, you're right that political risk is something which is very, very prominently we have seen in the past also in the last 10, 12 years, starting with Andhra crisis, and you are right that in Assam also the industry is at this point of time facing a lot of issues. But at the same time, in Ujjivan microfinance, we have always believed in diversifying your risk. And as far as geographies are concerned, and we are present in the majority of the states in the country. At the same time, we also have ensured that we are not beyond 15% of the Ujjivan portfolio in any of the states. So that we can mitigate this risk. At the same time, we have very strong EWS in place where we are able to understand things in advance and take corrective steps. But at the same time, when you have limited portfolio in a particular state, to a large extent, you already negate the political and the risk related to the particular state.
The Telangana High Court judgment was also there, which was helpful for the MFI sector or companies in this regard.
Which judgment?
Telangana High Court recent judgment was also there, which allowed the microfinance lending operations in Andhra and Telangana, which after that SKS microfinance problem was sort of banned. So, and they sort of political interference and the risk have been reduced post that judgment, sir. Is my impression correct, sir?
I would say that we have come a long way from the instance of Andhra crisis. If you take example of Assam crisis also, even Assam government and central government has given a lot of support to microfinance companies and borrowers of the state, and that has resulted into a lot of positives in the state. So things are changing, things are improving also, though there will be some risk related to political or geography, but at the same time, even the entire ecosystem is also slowly maturing. So with time, you will see these instances going down or little improvement in such scenarios.
Yeah, I think the Telangana High Court decision is very good because it puts end to that state governments cannot get involved in institution which is governed by RBI. So I think that is a good decision. So I think in the long run that will be beneficial as well because it provides clarity and it allows people to operate in a more secure environment.
Sir, the second question was about the foray into the secured lending. What portion do we at present secured lending? What is the future plan, sir?
So at present, our secured lending book is, our unsecured lending book is around 73%. But however, we are on a way to reduce the percentage in the unsecured lending. As I said, microfinance has done really well for us and it is growing well, and our position is very strong in the market compared to the industry and the peers. But on the secured side, housing has done really well for us. We have crossed 400 crores disbursement milestone in the last quarter, and it is a very profitable business for us. Even the asset quality has a remarkable improvement. And also in the last quarter, our 0 to 12 months MOB, it's 100% collection, and we have seen a very improved asset quality there. Also, if we have to segregate it region-wise, West is well on its way to increase the secured portion, and it is close to around 45%. And the strategy that we have put in place for housing has been executed well. We did a lot of changes and we made it very granular, local, geography, segment-wise. So all this has yielded results for us. In fact, we have classified our business lines into stable, emerging, and new legs of growth. The other businesses that would contribute this year to the secured portion would be the MSME, where we have put in a lot of efforts to revise the strategy. Gold loans, vehicle finance, the secured agri-business, and also our MSE, the FIG business, which is into NBFC funding. That has started well, and if I have to say, the NBFC funding business did its highest ever quarterly disbursement for this quarter. So as what Mr. Davis said in his initial speech, we should be able to arrive at around 68% of the unsecured book from the 73% which we are at now. So the journey has already begun.
And the last question is about our presence in the northern states, UP, Bihar, and Haryana, etc., wherein the collections at times becomes difficult for other NBFCs and due to the sort of law and order problems at times. So how has been our experience and how are we performing?
Yes. So you're right. UP, Bihar, and election time also for this financial year. And as I mentioned that our portfolio in a particular state is limited, and that we have ensured from day one as we started a microfinance company. So in these states, our portfolio is less than 50% definitely, and UP, Bihar you're talking about, there it is much lesser than that. At the same time, one thing that emerged very, very strongly in microfinance at Ujjivan is that we have opened various channels for a business generation as well as collection. As far as cash collection is concerned, cash collection is something which is with time we have seen that a lot of improvement as far as customer initiated digital repayment is concerned. About close to 20-21% customers have started paying digitally in the last financial year itself, and this number is improving. At the same time, we have also ensured that we have various infrastructure in place where the cash movement can be swifter as well as very, very safe. Today, I would say that close to 70-75% cash which is collected in microfinance, especially in these states, don't go back to the branches. It is done somewhere else, and which reduces your risk. So we are, I would say that especially looking at risks that we have in this state, we have got every infrastructure in place which helps you in keep yourself safe and your employee also safe as far as collection is really concerned.
Thank you, sir. Keep up the good work.
Thank you. Ladies and gentlemen, we'll take our last two questions for today. We have our next question from the line of Himanshu Taluja from Aditya Birla Sun Life AMC. Please go ahead.
Hi, sir. Thanks for the opportunity and congrats for a good set of numbers. Most of the questions has been answered. Just a couple of questions at my end, small. Firstly, when you mentioned that you wanted to deposit growth of around 30%, so what sort of you believe that a large proportion of this growth will be contributed by the retail deposits? And secondly, if you can just tell us what sort of the new initiatives have you taken in order to build the retail deposit franchise? What are some of the initiatives you have taken? So that's my first question.
Yeah, as far as the deposits are concerned, we did say 30% is what our deposit target growth is. And there again, the focus is on CASA. The CASA, which is 26% now, we'd like to take it up to towards 30% by the end of the financial year 24. And, we have put in place different ways of trying to raise the deposits. Of course, our branch network. We're also looking at the digital franchise for the deposit growth. And, we have divided our customer base into different segments. So all of these will be contributing towards the increase in deposit base. And our marketing teams are also working, both digitally as well as through other channels to be able to improve the brand and focus people on what we are able to offer. So I think, we have something good going and we will continue with that in that mode. And what is your second question?
Yeah, sir. Sir, last question is on this, since you are still awaiting the NCLT approval, any update which you can share, any communications? And secondly, once you receive the final NCLT approval, I believe the final set of approval will be the shareholders' approval. And do we expect after this NCLT approval once achieved, probably the reverse merger process will get completed within 30 to 60 days?
No, the NCLT right now is gone on vacation, so we'll have to wait till they return in early June. But yes, they will have a set of things that we have to do. The shareholders have to meet then there is the majority of the minority shareholders. All of those things have to be done. And once all of those have been submitted to the NCLT, they will deliberate and give us the go-ahead. Once the go-ahead is given, whatever is the shortest timeline which is available, we'll put that in place. But right now, I can't give you any specifics, but we'll work on it and try to close it in the fastest possible time.
Yeah, sure, sir. Thanks. So just one final data point. What is your average lending yield on a housing portfolio?
The blended yield on the portfolio is around 12.8 or 12.9. On the disbursement, the blended yield would be around 13.2, 13.3.
Okay, sure. Thank you, sir. Thanks a lot.
Thank you. We'll take a last question from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Yeah, thanks a lot, sir, for the opportunity. Just one question from my side. In the MFI book, if you can just give the breakup of client profile between formal, informal, salaried businesses, can just share that breakup?
So in microfinance, largely we lend to customers who are self-employed, but at the same time we have a specific product for customers who are salaried as well. But largely it is self-employed. I would say that about close to 10% customers who are into salaried category. The rest all are self-employed.
Self-employed. And does just follow up on that? The El Nino factor, has there been experience in the past where the asset quality or the collection has deteriorated during that phase? If you can share with respect to MFI book.
Yeah. Can you please repeat your question?
Yeah. So I was trying to ask, does the El Nino impact in past has impacted the quality of the book from our customer side, given the profile of the customers? Does that have an impact on the collection from that book?
So in the past also we have seen that our prepayments etc. is not that affected by as one of the reasons why for Ujjivan also, because we are not that rural. We have started an urban microfinance company. We are now present in rural as well, but large part of portfolio still is within urban, metro, and semi-urban location. At the same time, in rural location also, we have seen that if our customers are not into one kind of occupation, they have multiple occupation in their household. It is agriculture with some kind of other occupation also happening in the same family, like livestock or shop, etc. That helps customer recover faster.
Okay, thanks a lot.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Ittira Davis for closing comments. Over to you, sir.
Well, thank you very much to the IIFL team for conducting this session. We appreciate your support, and I'm sure that we have taken care of answering as many questions as we can. And we look forward to hearing from you in the near future, either one-on-one or in the next quarterly session. Thank you.
Thank you, sir. On behalf of IIFL Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.